Hello, everybody. It's great to be here one more time today. And my name is Gary Fowler. I'm the CEO, president, and founder of GSD, Get Shit Done Venture Studios, a premier AI and quantum venture studio located in the heart of Silicon Valley. I'm a 17-time serial entrepreneur with several unicorns under the belt. I was on the original management team of Click Software, which was sold to Salesforce for 1.35 billion, and also Eva.ai, an AI tech company that I co-founded with Dr. David Yang. At GSD, we believe that intellectual capacity is evenly spread around the world, but opportunities are not. So, with that, our show Simple Night presents today. Simple Night is an incredible super app that has a characteristic of everything from e-commerce to be able to do concierge travel. It is incredible. Check it out, simplenight.com. Anyhow, today I have a guest that I've known for a couple of years. So Suhail is a serial entrepreneur and investor. He's a tech investor and entrepreneur. He's got over 27 years with experience, a distinguished alumnus of Edinburgh's Business School. And I don't know what I want to say, Edinburgh. It's because it's a school in Pennsylvania, Edinburgh. And a qualified investment manager. He's founded multiple successful ventures across three continents. He's a founder of XCS.ai, creating the first of its kind public venture company dedicated to investing in private and listed AI ventures globally. So, with that, I'd like to bring Suhail on board. And today we're going to talk about AI driven innovation, ensuring prosperity and avoiding .com pitfalls. So, with that, here he is. Hey, Suhail, how are you today?
Hello, good morning, Gary. I'm well. Thank you. How are you?
Good, good, good. So, you're doing a lot of investing. So, how big is the fund that you're in right now?
Well, right now, what we're basically doing is as you may know, I had a financial network back in the UK, and so we launched Access last year in anticipation of the growth and demand in AI, and so now what we're doing is we're consolidating a lot of the assets we've got in the different companies, and our initial funds are going to start off relatively small at about 5 million. And the idea is to scale it to 20 to 50 million over the next year and a half or so. But again, we're going a different route than the typical private venture capital fund. So we're creating it as a listed investment company.
Well, how do
So,
you do that?
uh,
Is it
ver-
like on
yes.
Nasdaq or what is it? What exchange?
Yes. So we're initially, because I'm from Canada, I've got a lot of local expertise and a great network there. So we're going to start off with the venture exchange in Toronto, and from there we can then, once you're listed on one exchange,
Mm-hmm.
Nasdaq or Frankfurt or even Dubai Nasdaq, right? So the Nasdaq has different affiliates across the world, in Europe and in the Middle East. So our goal is to actually create liquidity for investors. And part of that is our business model is very different. We're not looking at 5, 7, 10-year holding periods. We're actually looking at 2-year holding periods. And that is why we
And how
focus
do
on
you do that?
pre-IPO.
Would you only have 2 year holding periods?
Yeah, so the way or the reason for that is that we're looking at pre-IPO opportunities,
Mm-hmm.
where we're looking at an exit strategy, which would be, and when we say, we're exiting in 2 years, we're exiting the majority or the largest position of the portfolio, so about 80% at least. So we may keep a small position for the longer haul. But pre-IPO, one of our requirements for an investment is that there has to be a defined exit strategy for the company, which is either through an IPO or a strategic sale, or if it is also already a listed company, then we have the liquidity there. And our goal is to be confident that there is going to be a catalyst for value creation in a short period of time.
Well, how do you
And
do
this is
that
where
though?
AI
I
comes in.
deal with these startups all over the world all the time. How do you do so paint the scenario. So you get a 2 year exit. What are you looking at? Must have growth stage companies that are,
Yes.
doing 20-30% a month, right? And
Well, I'll give you an example, Gary. We did an exit in about under a year. This was about 4.5x exit in
Mhm.
under a year. right? And it was a perfect case study for us, and a perfect example of the type of deals that we want to do. So this is a company coming out of R&D into commercialization,
Mm-hmm.
right? So it had already gone public several years ago as an R&D company. Many people don't realize you don't have to become a $10 billion company before you go public. There's a lot of opportunities for early stage development stage companies, and we see a lot of biotechs do this, right? So there's a lot of biotechs listed, and this was a nanotech company. So they've been around for 10 years. I think they went public over 5 years ago. And as usual, it always takes longer to commercialize. But they finally were starting to get their product in the market early last year.
Mm-hmm.
And so we've been watching it. And then when the contract started coming in, that was the indication that, okay, this company is now transitioning from R&D to commercialization. And that is the value creation driver. And the company in that time frame has gone up almost fivefold in less than a year, because now it went from almost zero in revenue to now hitting about $2 million in revenue for the year, and is actually profitable. And it's got a really good position that it can continue to reinvest and scale. And we see this company is doing about $10 million in revenue, from zero to 10 million in about 3 to 4 years. And so that's what we're looking for. We're looking for, in the hedge fund community, they may call it event driven, which is a term they use. They want to see some kind of a catalyst. For us, these are early stage companies, and we're looking at sub $500 million valuations, Gary. That's the other
Mm-hmm.
key thing. So, yeah, we're not going to invest in a company that's already raised significant money. So we're getting in, and even the companies that are going public, we're getting in companies which are planning to do a venture IPO, which means that they're going to be, they may only be valued at 5, 10, 20 million right now, but when they hit the market, they will command a value of 50 to 100 million.
Where do you find these companies, Suhail?
That's the most difficult part of the business model. And for that, Gary, we're basically using AI. We're actually using AI and as a scouting tool. So we're basically scouting all the essentially press releases of listed companies. We're working with Venture Bank, which I'm a partner of, and we're basically scouting all the funding news, all the rounds that are coming through, and it's basically a matter of identifying the ideal company that is going to meet these criteria, and then on the private side, reaching out to companies and saying, look, are you considering a growth strategy that is not the traditional VC model? There is a model called pre-seed, seed, IPO, or maybe
Mm-hmm.
a Series A and IPO. You don't have to go A, B, C, D, E, F, and then IPO, right? And I think now with what's happening in the AI space, I'm glad the mega techs are selling off, Gary,
Mm-hmm.
because they've been getting all the attention. Everybody's talking about Nvidia and Microsoft and all the
But I
large
remember
caps
when
that have been
Nvidia
investing.
back in the early '90s was a little tiny company
Yeah.
just doing boards, because I know Jensen, right? And
It was. I used to invest in it, Gary. I don't know if you remember ATI Technologies out in Canada, which did graphic chips,
yeah.
computer graphics, and they used to compete with Nvidia. So I used to basically trade because I'm a qualified portfolio manager. I used to be an active investor in the public markets, and I remember ATI, and they eventually got acquired by somebody. It wasn't Nvidia; they got acquired by someone, and it was used to be a kind of a head to head. Who's going to come out on top in this year's graphic chips? Is it ATI or is it Nvidia? And I think Nvidia has done an amazing job. They are so well deserving of the success they've achieved, because they were able to see where the puck is going. While everybody was still chasing, the old GPUs, they knew AI. They were in your camp. They knew that AI is going to be the big thing.
Oh, I mean, I
And
had a call directly with Jensen, a few years ago. We had a Yeah, he's
Yes.
been a great mentor, and I put him on with my partner David Yang, and had a discussion. And I mean, he knows. I mean, it's got to happen, Suhail. There's so much data around us. We got to make sense of it. I mean, think about it. In Suhail's world, you get about 300,000 items in your personal cloud. The entire web in 1996 is 257,000 websites. You have more
Yes.
information, Suhail, in your personal cloud. The entire web. The problem is Suhail's world found the same trajectory. By that I mean doubling every year. With Internet of Things, in 5 years, you'll have over 10 million items. Think about this. How many times in the last 2 weeks has somebody said, Suhail, I've sent you a message. Did you get it? Where'd you send it? I sent it your email or WhatsApp or LinkedIn or Facebook or wherever. Could be 20 some different sources or your 7 email addresses. A couple you don't
Yeah.
use, you haven't seen Hotmail or Yahoo or
Um,
whatever, AOL, but they're there. And the thing is, this infobesity problems are affecting us and it's impacting humanity because again, how many times the last 2 weeks is somebody said, "Did you get my message?" You say, "Well, I didn't see it. Where'd you
yeah.
send it?" And then you go through it, and then now even people don't even look. They just say, "Will you send it again?" Because they just want to see what's on top.
Right. Yeah.
It's
And
crazy.
it's frustrating
The
for us
company that
to
cracks
see
that
this
is
as well.
going to turn into a Google. Seriously.
Yes. Yeah. And as a team leader, it's frustrating at times because you'll send a message and assume they've got it, but it gets buried in tons of other messages that they're getting, and
Well, I
this is
mean, how
why.
can you look at it? You get this. You talk about the leading edge of
Yeah.
innovation, and you get 300-400 emails a day, and you're trying to figure out not only are they in your inbox and right, but I have to check your junk mail because just by chance, and I've had it happen, the stuff's in the junk mail.
Mhm. Yes. No, I
And that's
agree.
crazy. You know what I
And
mean? We have
yeah,
to develop some new tools that are diametrically opposed to the models we're using today because they're just not working. Email's like an antique
yeah.
now.
I agree. I think email is going to be obsolete, and even now, I don't know if you've used any of the Gemini tools or email writing response tools using AI, and it does help. But I think we're not there that we're comfortable letting AI completely, automate our replies. But I have from a productivity hack. There's only one email address that I check, which all the you know not to be kind of rude, but all the important people have, right? And I know if there's an email there, I'll respond to it. But otherwise, I leave
Well,
Saturday
what happens if there's a grain in
for three
something else?
hours to do it, right?
You go
So
down
otherwise, I don't
through
check my email.
what's that?
Otherwise, I don't check my email till Saturdays.
Well, I mean, that's
And
the problem is
yeah.
what's in there, those digital treasures that are there. Just one, I had it happen to me. So what happened is one of my email addresses, um, I hadn't checked for a long time. I go into it, it said, you have some unclaimed money that had been in an old bank account, and they sent it to the state, and that, it's there, and you need to call up or write in and get a notarized paper,
Mhm.
and we'll send you a check. So this is a state. I'm like, okay, what was it? It was an interesting amount of money. It was like, I totally
Right,
forgot about it. I didn't even know I had it. It was back when I
right,
was in my 20s and I just was, just didn't care. And now the
right.
situation, but these digital treasures, we're losing them now. We
Yeah,
can't find things.
that's true. Yeah, no, it's and but this is where I think AI will definitely play an important part. I see AI bigger than the dot com. I see AI bigger than dot com, cloud, and social combined, because it's going to be incorporated in all of this, right? And sometimes I think maybe Mark Zuckerberg is thinking, I should have renamed it Face Eye, instead of Meta.
Mhm. Yeah, well, that's what it's all about. I mean, he's got to use it
Right,
too because he needs things like hyper personalization. Who should you talk to? Where are they? How do you make this
right,
experience better so they're sticky and it comes back? A lot of things, but
exactly,
we're as we go down through this journey over the next 10 years, we're going to have technologies come out we even dreamed of, right? And they're going to
yes,
help. From my standpoint, if we do it right, it'll make our world a little bit better. And instead of this negative polarization, it'll bring people together. That's important. What kind of similarities do we have, Suhail, rather than the differences? And when you can start looking at that,
well,
then you can make
yes.
a dent in the universe.
Correct. Well, I think some of the similarities between the dot com and the current AI boom is that, of course, we've got a technological revolution, right? And I think now, because we have something to relate it to. With the internet, we didn't really have anything to relate it to.
Hmm.
I was in, I started university in 1995, graduated in 99. So most of the peak period of the dot com, I was in university, right? But I knew
You
something
were you were
was
in the ivory
happening.
tower. You didn't have to worry about it then.
Yes. I was in the ivory tower, trading internet stocks during my breaks because we were
Wow.
students of economics. So these were all nerds and finance
And how did
guys
you
that
make
didn't see
out,
that.
Suhail?
Actually, I did all right. I think it was in 3 years I did my portfolio grew like 5x.
You
But you
can't
didn't
beat
have to
that
be
for being
smart.
a college student.
No, it was so easy because you'd come in the morning. Classes. I was in Calgary, so the markets open up early. So before classes started, you'd
Hmm.
be able to place a trade. The markets I think opened 7:30 Calgary Mountain Standard Time. Classes didn't start till 8, so you'd be able to check, place a trade, anything with a .com on it, pretty much. And
Yeah,
then
in
during
those days, I
lunchtime, you'd
remember
see
the
it's up like 10,
pets.com and
20%.
everything. I remember
You know,
pets.com and some of these kind of
oh, the
niche.
globe.com.
Yeah.
The globe.com used to be one of our favorite trades. And of course, you had the Amazons and the Cisco's, but among the big caps, I think one of the similarities that you will see, we're still in the early stages. I think if we were to compare the dot com growth cycle between where we are right now, I think AI right now is kind of in 94, 95 of
Hmm.
.com. There's still, I don't think the mainstream really understands what's happening.
They don't. That's why they're going to come in laggers. It concerns me because we need to
Yes,
use this technology to double the food supply by 2050, and we can't increase the number of cattle because 26% of the problem is methane gas from cows. We got to be
mhm,
inclusive. We got to bring people in because if not, we're going to have a very scaled, very strange society. We're going to have people on the left that have, the mansions and all this stuff, and you're going to have people that don't have any food to eat. 2050, you got to double
yeah,
the food supply. What
exactly.
happens then? Well, if people don't eat, they get angry. So we
Yes,
got to go
and
down through. We got to catch this in the bud before it's a problem.
exactly, and that's where I think that's going to be one of the biggest pitfalls for us. How do we, and at Access, one of the visions that we have is, and one of the reasons why we're taking the company public is to provide equal opportunity,
Hmm.
right? If we have shorter holding periods, we can actually fund more companies, support more entrepreneurs.
Hmm.
The simple math, right?
Right.
Because we can turn over the portfolio,
Hmm.
much more quicker, right? And by creating a publicly listed company, we can actually allow individual, retail, institutional, anyone an opportunity to participate in these
Yeah, well,
companies
I
rather
love
than
that because
having,
that's the way it should be,
yeah,
right? It shouldn't be you
it
have
should
to
be,
do
yeah,
all this KYC and all this stuff. It should be, if you give it to the rich, they use it for a competitive advantage against you, right? So why don't we get down
right, yeah,
through and try to figure out how to
exactly.
democratize so everybody's wins?
You said exactly what I've been saying to investors that we're speaking to, because one of the first questions they have is, well, why do you want to go public? You can make this money and stay private. And we say that, the reason is we want to be able to democratize access and make it inclusive. You know, uh,
They're not
you
going to
know,
like that though. It's going to be
Sequoia.
tough. It's
They're
going
not.
to be tough to throw
It's
them over
but
the
I
top.
think it is, and this is why our earlier investors and our high net worth angels, and then we're gonna leapfrog the VCs and go direct to institutions and family offices, right? Which really do like the liquidity. They like the
Yeah.
mark to market and the ability to be able to not worry about a 10-year holding period, right? And I
Well,
think you
that's
will
really
see
smart
the
to go out to
transition.
families and family offices that have the money because it just
Yes,
short circuits of the I mean, it cuts down on the time it's going to take you to do things right. When you have those people,
yes,
they become your greatest cheerleaders, Suhail. behind the scenes, they're talking to friends just like they do with me, and they ask about what's happening because they don't have a clue other than ChatGPT. I can't tell you how many times I've heard that.
Yes, which is scary at times, when we get people referencing ChatGPT, and so I think for us, in terms of going back to the .com, right? It was an amazing period that lived through it, and I think a lot of the entrepreneurs, the AI entrepreneurs right now, haven't actually lived through it. They don't really
What was
understand.
it like, Suhail,
Um,
living through it? What was it like? Tell
yes,
the audience what it was like living through the
well,
downturn.
I was both an investor, an entrepreneur, while being a
Yep.
student. Right? So I launched a .com in 1997. I was trading, the .com stocks from 95. And looking back, it was surreal, and perhaps, when you're young and
Well, you did it,
naive,
right? You did it. You went in, you did it, and
yeah,
here you are
yeah,
later, right? You can part of it is
exactly.
visualizing where you want to go. Do you really want to do it or not?
Yes. And I think like my advice to the entrepreneurs and the investors is a lot of the investors, they're worried, is it too late, right, to get
Yeah, but
into
they don't want
the
to come in
AI?
early because they don't want the risk. They're like they want both the
Yeah,
best worlds, and it doesn't work like that, right? You either go one way
it
or go the
doesn't.
other way. It's fine. I'm not saying either one's
Exactly.
wrong. You just figure it out.
Yeah, figure it out and just manage a risk, right? So,
Exactly. But isn't that what
Warren
life's
Buffett
all
said,
about, Suhail? Managing the risk.
managing the risk, absolutely, and because it's only risk if you don't know what you're doing,
Right.
right? Find great people, find strategies that make sense to you, invest in sectors that matter to you. So, a very important thematic theme for us is healthcare, sustainability, and cybersecurity,
It's
right?
healthcare,
And I'm a
sustainability, and cybersecurity, right?
Correct.
That's great.
And because I'm a great believer, Gary, that AI can transform healthcare for the better. We can actually use it to solve and, God willing, cure a lot of these horrible diseases that we haven't really even made a dent over the past
Yeah, no,
50 years.
because we focused on the wrong things. I just worked on this
Yeah.
interesting model. It's a company that has a immunotherapy vaccine. So basically, you take the vaccine, and within a few short days, you start disappearing your cancer. It actually goes in and treats it as a virus, right? And you get rid of it.
Mhm.
So imagine having
Amazing.
those kind of emerging technologies that would be like
Exactly.
Ferraris in the garage. They'd be in the garage all the time, literally, because people don't know what to do. They know how to build shit, but they don't know how to take it out to the market, which is just as important or more
Yes.
important.
I agree, absolutely. And this is where, from an entrepreneur's perspective, I think they have to be really careful that they do have a vision,
Hmm.
and they have a business model that is sustainable. Because we know a lot of the .coms, a lot of the internet companies that came out, probably 90% of them don't exist right now. You
I
remember
remember
Amazon.com because it
pets.com. I remember
survived.
the thing, "Row, row, row, row," and it'll be this. I'm like, this is
Yes,
the dumbest
yeah,
commercial I've ever seen. "Row, row, row, row."
exactly.
And then all of a sudden, no more, right? And I remember
No
the
more.
guy that was running it, I think it was from KPMG, if I recall.
Okay.
And imagine being, having a multi-billion-dollar company, and then you come out of that, right? It's
Yeah.
just interesting.
And
So,
that's right.
how do
And
you go down through and judge what kind of investment you want to get into?
well, we use a very quantitative process, Gary.
Hmm.
So the model basically, obviously, we've got the financial projections and the market size and all of that, but we also then quantify a lot of the qualitative factors, such as management. And the bottom line is for us to be able to determine the probability of management executing within a
Yeah,
certain
but
time
I'm
frame.
not sure. I'm a clinical psychologist, right, myself, but I don't know if you could measure because people go up and down and in and out. If you made a decision today that Sergey doesn't feel well and is going to go home, and then the next day, you kind of like he's absent, that kind of thing. You just make sure you don't have any false positives, right, or false negatives.
Correct, correct. And this is where the ongoing monitoring is important. Now, it's very easy for us to do this with listed companies. you know. So I'll give you the name of the company that we invested in that did that 5x for us over the less than a year, and
Yeah.
it's actually based in California. It's called California Nanotechnologies. It
Wow.
came out of, I think, um, I'm not sure if it was Stanford. I don't think it was Stanford. It was maybe some other university in California. They're listed on the Toronto Venture Exchange, right, under the ticker CNO, and they've literally spent years and years and millions of dollars in R&D, and now they've got this nanotechnology and nanomaterials that they can use, and they have some amazing Fortune 500 companies that are their customers. Now, for them, it's been a long haul,
Right.
and what gave us confidence is, one, the grit and the persistence of the management
And
team.
how important is that for a startup founder to
Yeah,
believe in their dreams?
I rate it as above and at the top in terms of importance.
Hmm.
It's more important than their IQ, I think.
Because the thing is,
Because if you don't have
doing a
grit and
startup all the
persistence,
time,
yeah,
doing a startup every day, you're taking risks no matter what you do. And it's always a calculate.
yeah,
You got a brain thinking, well, how much is that worth? And what's the
yeah,
chance I'm going to sell it? And should I bring it back home? You know what I mean? You go through that, but that's,
yeah,
hats off to you. Most people don't reach out like that. You got to go out because we have African companies. People don't realize in a place like Nigeria, they can have some of the best startups in the world are located there, but nobody talks about it. It's crazy,
exactly.
right? If we're going to change the world, let's do it one step at a time. Hey, listen, we're coming up to the top of the show. Closing thoughts, and how do people get a hold of you, Suhail?
Yes. So they could get a hold of me at access.ai. So Suhail, Suhail at access.ai. And I'm LinkedIn is the best. I'm not a big social media guy, Gary. I think the only social media I check on a daily basis is LinkedIn. And but happy to have a conversation with entrepreneurs, investors. We're actively seeking entrepreneurs and companies to invest in, right? And I think for us is to be able to support the entrepreneurs in terms of developing a prudent go-to-market strategy, as well as a funding roadmap, because it's just as important, because we don't know how long the AI party is going to last. We don't know when the when the cops are going to come in, and the party is going to be shut down. But so planning is crucial.
No, I agree with you. So, how do people get a hold of you?
Yes.
LinkedIn.
So LinkedIn is the best, or email me my first
And
name,
so, what
SUHAI.
should they look at on LinkedIn? Suhail. So, can you spell your
It's
last name?
yes, Ahmed, Ahmad.
Hmm.
And if they just search Sohail at Access AIXCS, they'll find me.
Great. Suhail, thanks for taking time out of busy schedule to join us again. It's really appreciated.
My
And thanks
pleasure,
to all
Gary.
my audience for joining one more time. Simple Night Presents. My name is Gary Fowler. I'm your host. Stay happy, stay safe, and stay healthy. And I'll be back to you again soon with another exciting edition. Thanks, Suhail. Appreciate your time. And again,
My
thanks,
pleasure.
everyone.
Thank you for the opportunity, Gary.